Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, December 22nd, 2020. I felt like doing another video here for those of you that are around this week trading or even care to listen to these updates. It's usually a week that I either take off completely or keep things light, but I'm becoming increasingly interested, as you can probably tell from my posts lately, in the market. Like I said, this is, I think a time where well, I can tell you it's the first time I've seen some decent sell signals over the last, several sessions, last week or so, in quite a while in the markets. And I think there's opportunities, and sometimes opportunities come when least expected. This is usually a kind of the doldrums week, the week of Christmas, and head into the end of the year. So, maybe these things pan out, maybe not. But as a trader, I've learned to, capitalize when the opportunities present themselves. You can't. Stock market's not an ATM at which you can extract money from on a daily basis. I mean, maybe if you're Goldman Sachs or you own a high frequency trading firm and you're jumping in front of order flows, being sold by Robinhood and those other brokers, sure, that's what they do. But as far as swing trading, humans making decisions, you have to sit back and wait for the opportunities, and so that's why I'm doing these videos right now, because I think the opportunities are there. So let's do a quick update. SPY, S&P 500 index tracking ETF, 60-minute chart. We had sell signal number one back here on the break of the minor trend line. Kicked back, hit the first target zone right there, bounced up, put in, extended the negative divergence, put in a larger divergent high, broke down, and we back tested, as I pointed out yesterday, an objective short entry on the back test. Still is. We're really close, so just as objective right now, since we're just below the trend line. And even more so, we had a reaction so far. And you zoom in, I define a reaction as when you're going one way, either up or down, you either stop and consolidate, or you have a clear reversal. And it can be both. So far, the reaction was we hit the trend line, and we've been back testing. These are all 60-minute candles, and starting to move lower. So if we can build up downside momentum, then it'll become clear to all, or at least clear to most, that that's what the S&P 500 did: break down, back test, and with more downside to come. So again, these are just near-term targets, and just to kind of reiterate my mindset, there's, right now, there's a lot priced into the charts, and I'm not going to go over the long-term charts in this video, but there's a potential for, more than just a pullback of a few percentage points. In other words, let's see, on this chart, the 60-minute chart, the maximum potential target I'm showing here is about 350 and a quarter. We'll call it 350 right there, give or take. And that's about a 4.5% drop, right? You might say, oh, Randy, well, I'm not bothered with 4.5%. Again, those are near-term targets, active traders. If you're, around this week and you're trading ES, the S&P 500 E-mini futures, or even the micro futures, which are MES, if you put an M as in Mary in front of the the charts that I post on ES, you have MES. Oops, that's not a good E, but you got what I'm saying there. That's the micro contract, and I think they're 1/10 of the size. Same with NQ. You go MNQ, because I'm always posting those charts of the NQs. The NASDAQ 100 futures. There's your mini contract. Good for people that want to get their feet wet with futures, but don't want to take the big plunge. Of a single contract of NQ is probably too large for a lot of traders out there. Or even if they have plenty of capital in their accounts, you might have 1 million plus, but you don't want to, you don't want to swing a position in the NASDAQ 100 that's almost $200,000. That's what it represents. So they just cut it down by I think a factor of 10. And then for the Russell 2000, which I'm going to get to, I'm not going to go over the futures in this video. I'll just do the ETFs. But you do M2K. That's not a Z, and that's the micro contract for the what's normally RTY. RTY are your Russell 2000. That's the Russell 2000 index futures. E-mini futures, and this is the micro contract, M2K. All right, so those are your futures, at least the the ones that I usually trade. Of course, the Dow is out there, YM and all that, but I don't trade the Dow. All right, let's move on. There it is, back test. And then again, to kind of reiterate what I was saying, is there's potential for more downside if these sell signals even pan out. We've had uptrend has been strong, but I'm taking them on face value as of now, and so. An active trader just wanting to get 1-2%, that's why I was just talking about the futures. And you don't have to get much. A 0.5% can put in hundreds of dollars in your pocket with just a single contract in the futures. A percent can put in well over $1,000, a 1% move. So a 4% or even 2% pullback for an active trader, again, I don't have to tell you that if you trade futures, is well worth your time and effort. So those are potential targets. But then swing traders, might turn your focus to the longer term charts if you do take a short position that you plan to hold through the holidays. Trading volumes are going to pick up after the first of the year, and there's the S&P 500. Nothing's changed in weeks now. Big old divergent high, just like you have in the NASDAQ 100. Everything else, the first big, these are the first big divergences again in all the indexes, as well as the NASDAQ 100, which we didn't have at the last peak right here when you had it in the S&P. First divergent high since back there. Before that big 36% or so drop. So, these divergences very often, much more often than not always, but more often than not, precede major trend changes. So where I'm going is, again, if we start to get some downside traction here, a longer term swing trader may hold out and ride out all the counter trend bounces and zigs and zags and go for a much larger swing trade that may last weeks or even months. Again, if we start to roll over, especially if we get sell signals on the daily and weekly charts. Right now, I'm just looking at these sell signals on the 60-minute charts. Moving on, enough of that. I just wanted to kind of share my mindset on, how you might want to trade this now if you are trading at all. And QQQ, same thing, 60-minute chart. We had sell signal number 1 right here, breakdown, pulsive move, but then the SPY hadn't broken down yet. SPY just recently broke down and coincided with this minor trend line break and that second divergent high or extension of the previous divergence right there. And that's where we are. So the sell signal's still intact right now. You still have the divergences. And these are all potential targets you can see on the 60-minute chart of QQQ. And for you small cap traders, I haven't forgotten about you. There's IWM. A lot of meat on the bone there too on this one, probably more so. In fact, I do think this one will probably outperform on the downside. It usually does. Small caps tend to rise and fall more because they're higher growth companies than large caps. The larger a company becomes, it starts to mature and their growth rate tends to slow. So small cap companies have a higher growth rate. So when things are going good, they tend to rise faster. And when things are not going good, they tend to fall more so than the large caps. So again, not always, but quite often. And so what you have there is a nice clean trendline break and back test. I mean, it doesn't, like I said, it doesn't get any more objective than this. I wish I could promise you or anybody, including myself, that that guarantees we're going to go down here. I can't do that, but I can promise or say that this is a very objective short entry. You had a breakdown, well defined, impulsive. It was a gap down and a back test. And so right now, as I'm doing the video, this is a very objective short entry on IWM. And and that's why I'm trading this week and doing these videos, because if I waited to the first of the year, fortunately I'm around, then IWM could be all the way down here. We could see some profit taken into year end. There's been a change of guard in Washington. Who knows what's going to happen, but if higher taxes are on the horizon and things like that for 2021, people might start thinking, yeah, okay, maybe time to book some profits right now, take some off the table, things like that. So it could go the other way. You could see money flow into the market, but again, the market can always go up or down. I don't need to tell you that. All I can say is, boom, you short here, on the back test, targeting any or all these targets or any other ones, maybe longer term targets on the daily chart with stops somewhat above. Your stops will be, commensurate with how far you think this is going to go down, if you do think it's going to go down. If you're only looking for a quick pullback trade, you want a tight stop. If you think the small caps are going to drop 10% or more, you can allow for a wider stop. Maybe they ramp it up. Remember, you do have an increased chance of whipsaw signals as you head into the end of the year. A lot of window dressing, positioning with funds, year-end stuff, tax selling, all kinds of stuff that can cause whipsaws. Maybe this was a whipsaw breakdown, maybe not. Maybe we have a move back up. Again, who knows? I don't know for sure. Like I said, can just tell you it's an objective short entry. All right, next up, that is the indexes. Let's cover a few other things. Speaking of the indexes, I'm going to make a prediction. I think at some point in the near future, we're going to see changes to the S&P 500 and this bad boy. If you've been reading up, there's a lot of articles out there online about Tesla right now. I encourage you to read up on these. You can go to yahoo.com, Yahoo Finance, type in, or just Google search Yahoo and then TSLA. You'll get Tesla. They'll show you all the news articles, or you can go to sites like Seeking Alpha. Tesla is insanely overvalued, and it had an insane ramp up leading up to, before and after the announcement of they were going to be included in the S&P 500. And so most articles are saying, look, this stock is, you read about the valuations, it's mind-boggling how overvalued the stock is. Competition ramping up across all the other auto manufacturers. Tesla, they might have been first, no, not technically first to market, but for somewhat they had an advantage there with electric cars. And every automaker and their brother now is has their eyes or their crosshairs on the electric vehicle market. Tesla's been losing market share rapidly in Europe. I'm sure that's going to happen here in the U.S. soon too. And again, read about it. So here's the point: this stock, because of the hype, was one of the darlings of Wall Street, beloved by a lot of traders. And it was included, and that's the probably one of the problems with the S&P 500 and their inclusion metrics. It's capitalization based, so the bigger Tesla got, it got to the point where it had to be included in the S&P 500 regardless of valuations. It's a mechanical process. So and again, now what we're seeing is the inclusion date just happened. You're already seeing profit take in the last few days. And you look at this and it's nothing big. If you're long Tesla, it might be big to you, but let's just look at a 5-minute chart here. Just the last couple of days, the stock has dropped, 10%. And again, that's typical for this uptrend. You can see these drops during the uptrend. 10% corrections are pretty much the norm lately. And in fact, that's where the dip buyers have been coming in, around 10 to 13%. Anywho, I just wanted to say that this one has a lot of hot air under it. I've covered it in recent videos, and I'll maintain these targets. I think this is where the stock is headed in 2021. Earlier, probably hit this downtrend line. Whether there's more upside or not, then that 334.50 target. Ultimately, I could see the stock coming back here to 188 or so. And I've seen quite a few, even some detailed articles, with people that are, much more versed in fundamental analysis than I am. I use technical analysis to predict where stocks are going. I do have a background in fundamental analysis, and I'll, apply it when with certain trades. And fundamentals is kicking the tires, looking at things like valuations and earning prospects and market share and growth rates and all other things going on with the company. And I've seen, reports that, say the stock, to bring it back to fair valuation should, calls for about a 70% drop. And, if we get down to that 188 target, that's where, that would be that 70% drop or so. So anyways, Tesla's overvalued. That's going to have an impact on the indexes if and when that bubble here in Tesla, or at least the market finally checks, valuations, and puts Tesla back where it needs to be. And of course, like everything else, the tide is incoming tide right now, meaning the tide's rising, the trend is up. When the trend finally changes, it goes the other way, and then you'll have a lot of profit taking along the way. Indexes and mutual funds lightening up because they're overexposed to Tesla now, especially with it being included in the S&P 500. There are a lot of shorts in the stock, and that's, I think that's actually helped fuel this rally and could keep it up for a while. I don't know. I just wanted to point out that's one on my radar. And I think if you're willing to give it room, you could short it. Right now, there is an objective short entry on the 60-minute chart. Here's a bearish rising wedge. Right there. There's your divergences, divergence lines, I should say. There's your uptrend line. There's the breakdown. It's pretty impulsive. First target or support there is about 600, just over 600. Probably get a reaction there, and when that breaks, you can see next target about, call it 505, let's round up, and then 464. So these are my intermediate term, near-term targets for Tesla, and that would be a drop of up to about 26% for those of you interested in Tesla. Again, 464. So. And speaking of the S&P 500, here's SPGI. That's S&P Global. And you can see this chart's just not looking very healthy. You know, stock market, or at least this stock, I should say, peaked back here. Back here, the stock topped in early September, and it's already down from that point in time, 18%. It's that big support. I will say that. I would short it right now. That would have been a great downside target had I had this one on my radar back then. There's a support zone that I've had on the chart. And in fact, there's a downtrend line. So it could get a pop here. And any rally back up to 341.50 or so would provide for an objective short entry with a stop above, or a solid breakdown below 310. This one's looking really toppy. Again, it put in that divergent high right there, just like it put in a divergent high there before the big drop into the lows, just like it put in a divergent high here. That was good for, during an uptrend, it was good for a correction about 13%. And then you look at the weekly chart, and here's your bull and bear markets in this stock. This was back in 95. This one had a multi-year bull market right there, a well-defined uptrend line, ended with a divergent high back in 2007. Vicious bear market that followed right there, and there's your long-term bull market uptrend line. So it isn't a bull trend, but along the way, what happens is in a bull market, you come back and you visit. From time to time, you visit your primary uptrend line. So even if this thing's got plenty of legs left in the bull market, I think it's due to come back and visit the check or visit the trend line once again. Why? Well, you've got seems to come back and visit the trend line when you get these divergent highs. There was a little one actually right there too, right before that test. Divergent high, check. Divergent high, near check. Divergent high. This was a divergent high also right there, and we've only extended the divergence. So we come back and check, and then sooner or later the bull market ends. You can look and see this one's very extended, and then you have a lot more downside. So there's one to keep on your radar. What might happen? Who knows? Maybe a bear market would definitely happen. When there's a bear market, money comes out of index funds and everything else, and there's less money in there, less new funds popping up. They get royalties, I'm sure, for every fund that uses benchmarks to the S&P 500. Okay, so that's not actionable right now, other than maybe if you want to go long for a little bounce, divergent low there. Again, more of a longer term play, and I just want to point out these levels, and just the whole thing about Tesla being included in the S&P 500 made me go to look at this one. Copper, we had, like I said, very nice sell signals on copper yesterday. One of my favorite right now, short trade ideas. Broke down, back tested. I covered this one. I've covered it quite a bit recently, so if you're watching this video, you probably caught those. There's your trend line, nice clean uptrend line on this is a 60-minute chart here. Breakdown, back test, as pointed out yesterday, your objective short entry, and had you taken advantage of that, it's down 2.3% today or since then. And that's a nice move again for a futures contract. The HG contract is about $88,000 per contract. So when you get 2%, 2.3% of $88,000, if you shorted there yesterday so far. And I did add some levels here. Updated this 60-minute chart for active traders. These are support levels that are likely to come into play. But as of now, it's a breakdown. Whether we bounce here or not, I think there's more downside to come, because that was a pretty long-term uptrend line right there. And for those of you that do not trade futures, CPER, it's the only other direct proxy that I'm aware of to trade copper. This is an ETN that holds or tracks copper futures, and that's it. Sell signal, it's about as good as it gets right there. Nice, clean, well-defined uptrend line on the daily chart. broke trend right there yesterday, followed through today, and that's an impulsive drop. It's a pretty nice gap down. Targets I've already outlined there, about 21, 19, and then 18 are your targets for CPER. Watch, rinse, repeat stuff. Look for these divergent highs or divergent lows, you go long. You look for the divergent highs, and of course with sell signals and buy signals, there's your divergent high correction, divergent low rally, divergent high correction, divergent low rally, all the way up to this point, and now divergent high and a breakdown. So I think there's a lot of downside in copper. And now, if that plays out, that will most likely, not necessarily, but most likely correspond with a correction in the stock market. Copper is an industrial metal. It's reflective of growth. And yeah, there's big demand in China too, but the global markets are interrelated. It'd be unlikely to see a drop to these levels without the stock market having at least a half decent correction. And last but not least, gold will most likely be impacted on what the dollar does. Just recently I've been highlighting this on the Euro-US dollar Forex pair uptrend line right here. We had a stick save right there, intraday break, closed back above it, and now we're down below it. Barring a pretty good reversal today, this will be a sell signal on the Euro-US dollar. So that means bearish on the euro and bullish on the dollar. Dollar up, euro down is what this means. If this plays out, it's my first target, breaks that, goes to my second target. And if this scenario happens, that's going to be a net bearish factor for gold, because gold tends to fall when the dollar is rising and vice versa. So there it is. There's our sell signal on the Euro-US dollar. Let me pull up UUP, see if there's anything there worth noting. UUP is the US dollar ETN, same thing. There's our positive divergence on the dollar right there. And there's our breakout of a downtrend line. Again, to be confirmed on a solid close today, and a potential upside targets on UUP. So that's probably going to continue to put pressure on gold in the near term. And yeah, that's that. And so then if gold goes down, silver will drop, and GDX will drop. GDX down another 2.59% today. So, although a few weeks back I pointed out, maybe time to start scaling into gold, and I still think it was, and that was a good buy. There was a good chance to exit if you got the initial bounce for more active traders. But gold may, continue to need to pound out a bottom for a while, especially if the dollar is going to rally. And so, ideally, if you're scaling into gold long term, can't guarantee we get back there, but ideally, if you can add on or in this buy zone, but not below it. Bad news for gold if it breaks much below that 158-ish level right there. So that's my sort of near to intermediate term outlook. Again, a little bit more upside to see in the dollar to help confirm the breakout. A little more downside in the euro, but one to watch. Okay, we'll wrap it up here. This is the dollar index futures right there. DX is the symbol, hourly candles right here. And there's that bullish falling wedge pattern. We had the breakout, back test, a little bit of a overshoot there, but the dollar's rallying back above that level. So this would really help confirm the breakout in the dollar to see it take out that 91-ish resistance level right there. And again, if that happens, then that's going to be should be net bearish for gold and the related mining stocks. Okay, we're going to wrap it up here. I'll get this video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.